Over the last 5 days, the crypto market hasn't just been volatile. It has been a chain reaction of macro shifts, geopolitics, and psychological warfare. It all started at the beginning of the week. Bitcoin fell into the $66,000 to $67,000 range, repeatedly failing to break the $70,000 psychological barrier. This wasn't a flash crash, it was a systemic exhaustion. Market sentiment turned toxic. The fear-greed index plummeted into extreme fear. Capital didn't leave the market, but it clearly stood on the sidelines, waiting for a catalyst. And it wasn't just crypto. Global equities began showing signs of instability. Asian markets opened weak, and South Korea was forced to trigger a circuit breaker, a rare signal that selling pressure was reaching a breaking point. The picture was clear: no buying power, no narrative, only waiting. Then, a familiar variable appeared: Donald J. Trump. With just one statement suggesting that negotiations with Iran were progressing well, the market reacted instantly. Bitcoin surged from $66,000 back above $70,000. Ethereum reclaimed $2,100. US stocks jumped over 1%. This is a textbook example. The market isn't being driven by fundamentals, it's being driven by expectations. But those expectations are fragile. Just days later, conflicting reports emerged. While the US claimed a deal was close, Iran denied it, setting impossible conditions. The market reverted to its natural state: uncertain, directionless, paralyzed. By March 27th, the pressure returned. Bitcoin lost the $70,000 level again, touching $68,000. But here is the critical data point: BTC did not drop as sharply as equities. The floor is holding, the crypto market hasn't broken yet. Meanwhile, the Nasdaq dropped over 2% as a massive shift occurred in macro sentiment. The probability of a Federal Reserve interest rate hike suddenly jumped to 50%. The narrative shifted from "when will the Fed cut?" to "will the Fed hike again?" Look at the commodities. Oil prices are surging on fears of supply disruptions at the Strait of Hormuz. Gold is stabilizing after a long decline. These signals only appear when geopolitics reach a boiling point. Inside crypto, the cracks are showing. Circle is under regulatory fire, and USDC's market cap is shrinking. Simultaneously, Tether is auditing its reserves, a move for transparency that reflects growing market pressure. Yet, TradFi is moving closer. The US is considering crypto for 401k retirement funds, and for the first time, crypto assets are being weighed as collateral. Here is the brutal summary of the current market. Crypto is weak, but not broken. Equities are under clear macro pressure. Commodities are pricing in geopo.